Hello, and welcome to the Wade Borth podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. Hello, and welcome back to the Wade Borth podcast. Today, again, for the fourth time, I believe, Nicole's joining me, and we're going to be talking a little bit more about Nelson Nash's book, Becoming Your Own Banker. The infinite banking concept. Wow. But so today we're picking up on the discussion that we had last time, which is the next chapter on page 17 in Nelson's book called The Problem. And I truly believe this is where we need to start, and this is the root of everything that we need to do. It starts from this chapter going forward. And what I mean by that, before I do that, thank you Nicole for joining me. I appreciate your time and participation in this process.
Well, thank you for having me. I enjoy these conversations.
Good. So hopefully we can get people to take a step back. One of the things that Nelson encouraged us to do is rethink our thinking. And that's really where we're at with people. From my perspective, I'm so excited about this process. I'm so excited about what this can do for us. But I want to jump to the end and find a solution for everybody. That's immediately what I want to do. I'm a fixer, right? So I like to fix stuff. I like to find the solution. But just before we got on, you and I were talking about this idea of, unless people understand what the problem is, they don't even know that they need a fix. It's like that whole idea, if you go to the doctor and he prescribes you medication and he has a row of treatment, and really just to the extreme, somebody says, hey, we're going to have to amputate your arm, and you haven't even talked to him about what the issue is, you're like, whoa, wait, what's the problem? Why should I do all that unless you can explain to me what the problem is? But if the doctor sits down and says, hey, you have this infection in your arm, it's going to kill you in 3 days, you're going to remove the arm, we're going to put you on antibiotics, we're going to put you in the hospital, then you might say, oh, yeah, I want to get better, so yeah, I'll do what you're telling me to do. But a lot of times, a lot of practitioners, a lot of people in our lives like to jump to the end. And they jump to the end because they know what the solution is, but they need to have you recognize what the problem is at the very beginning. Would you not agree with that, Nicole? That was the conversation we were having.
Yeah, I would totally agree with that. And I think as practitioners, we see regularly people with the same problems. And so it's easy to spot it because we've seen it many times before. But that doesn't mean that person has spotted it in their own life. Or they may have a feeling about it, but they just don't know exactly what the problem is.
I've had a number of clients, and I'll pick on the engineers and the CPAs of the world. They're like, oh, hey, send me an illustration. I want to see what this looks like. I'm like, you're looking at the tool, but you have yet to recognize what the problem is. So I just refuse to do that. I'll say we have to understand and diagnose what the problem is before we can find a solution. In other words, it's not fair to you, it's not fair to me, and I think we waste a lot of time. That's why I think this session, this podcast today, is going to be so huge, just because it's going to help people recognize what the problem is, address the problem. And then once they've addressed the problem, admit that there is a problem. They have to come to the conclusion, right at the beginning of the chapter, Nelson quoted a Bible verse in there. And he said, when Jesus saw him lying there and learned that he'd been in that condition for a long time, he asked him, do you want to get well? Right?
I have that as well.
Yeah, it's huge. We'll help you identify the problem. That's the very first step. Then we have to come back and say, do you want a solution to that problem? Do you want to get well? And then once they say yeah, or once we say yeah, because we have to do this in every situation in our lives has a mini portion of this. We have to identify what the problem is, and do we want to solve that? What's the process and what's the product? And that should be in that order that we go about doing that. And that's really what this chapter is all about. So one of the things that we get quite a bit, and Nicole, in your position, you probably get this as well, people that say, all I really need to solve is a higher rate of return on my investments. That'll solve all my problems. You ever hear that?
Yes, I hear that all the time. And in fact, you're right. This particular chapter talks about that. And we think that higher rate of return is going to solve all of the problems because, of course, you're going to get this higher rate of return. You're going to have more money and more money problems. And
I would agree that more cash solves a lot of problems. But if cash was the only solution to problems, then people that won the lottery would always be problem-free. Because we all have the ability to go out and earn this infinite dollar amount that's out there. But it's more along the problem lies within our ears first. We have to understand how money works and how money flows. And then once we have that understanding, then cash can be the solution. But cash on its own doesn't solve all our problems. Again, I've shared with you, I love the show, How the Lottery Ruined My Life. People win the lottery and they think, oh, I have the solution. I've won all these millions of dollars. I'm not going to have any problems. 2 years later, they're without friends, they're without any money, and they're in a worse situation they were before they actually won the lottery. And like, why is that? And it goes back to this whole idea, right? Nelson writes in his book, he says, I would surmise that if we took all the money equally, spread it out equally amongst all the people in the world, that within a handful of years, 5 to 10 years, 90% of the money would be back in 10% of the people's pockets because they understand how money works.
Yeah. I was just going to say, I'm going to skip ahead just a little bit, but when we were talking about the higher rate of return and how people are thinking that's going to be the solution to their problem, I've also got highlighted in here, it never seems to dawn that the volume of interest is the real issue, not the annual percentage. So I'm skipping ahead, but it just dawned on me at that moment that we think the higher rate of return is the answer, but we never think that the higher volume of interest is the problem.
Yeah, exactly. So let's tear that apart just a little bit here, because I think that's huge. So if we think about it, if we spend, I think Nelson's example in the book on page 17, he was talking about what 20% of our money flows to autos, and then I think 30% flows to housing of our household income, and then of our money flows to our living expenses. And then if we're lucky, truly if we're lucky, and we were one of the few Americans that actually saves 10%, that would be amazing, because I don't know that the savings rate is even close to 10%, maybe half that. But let's say it is 10%, just for easy figuring. So let's say you have a family making $50,000. And I know this is a podcast, so I'm not going to get real technical with the numbers, but let's say you have a family making, let's say it's $100,000, and we can save $10,000 per year. What does everybody focus on? They focus on, there's a lot of noise on the TV, a lot of noise in advertising. Well, come to my firm. I can get you, your current advisor is getting you 7%. I can get you 8%. And so there's all this focus. There's all this focus on 7% over 6 or 8% over 7 on a $10,000 that we're actually able to save, which again, I think is a way inflated number. But let's say it's $10,000. I can get you 1% more, right, on that $10,000. That's $1,000 more.
Right.
So we're taking all the time and the effort. And more risk. What's risk? It's just what's the likelihood of we're going to lose. That's what risk is. We're taking more risk. We're doing some things that maybe we don't normally do to get $1,000 more.
Yeah.
You do that all the time with your clients, I imagine, as well. Or some of your clients, not all your clients, because they're IBC clients as well. But where would they be better served? Maybe to start focusing on, because people focus on the wrong thing.
Yeah, and so thinking about all the places where they have debt that they're actually paying interest on. And Wade, some of this too, just again thinking through this, in today's world with super low interest rates, people are looking at, so they're going to advisors that are saying, I can give you 1% or 2% more. They're looking at the bank where they can't get any interest. They don't want to put their money in there, but they're perfectly willing to go take out loans and get debt on the books because they can't save money and get any return for it. So they just spend the money and they pay more for it. Right.
Isn't that interesting how this is, I really believe if people understood the process of banking, again, let's talk about the 4 steps again, right? The first step is recognizing the problem. The second is coming to the conclusion that, yes, I want to get better. I want a solution. Third is that process. And now we're talking about that process a little bit, right? So it's like the process of when we put it to work, we have to make sure that our cash or whatever it might be is valuable. Because what happens is, the current banking structure as it is, and the current has people thinking that their interest has no value, has zero value. Why is that? Because you're giving me 0.25% of my money. That's the banking industry telling you it has no value. People of wealth are saying, I got cash. I can go find a great place to put it. And so they see their cash as hugely valuable, but then you have to take the banking process and say, now I'm going to apply an interest and a principal payback so we can refill that cash coffers. Because if you're in business, again, Nelson's book is designed to get you to think like a business person and stop you from thinking like a consumer.
Yeah, the banks and the financing institutions have essentially made people think that their cash has no value, and yet clearly their cash does have value because they want your money. It clearly has value. They flip that around so that you're thinking there's no value in putting my money in a savings account, but I will go take this loan and buy a car, or buy a house, or buy a boat, or whatever.
Yeah, exactly. They get us to They get us to think that has no value. They want it because they see it's a tremendous value. Why do they find value in that dollar that has no interest earning capabilities? Because they don't put it in a place that earns interest. They let it flow. They understand the banking system, and they put it to work lending money out, and they're earning a tremendous amount of money off the little money that they gave you.
Yeah, that's a really good point. They don't take your money and park it in a place of interest. They put the money to work where it's flowing.
And that's the kind of the conditioned thinking that we've been subject to. You and I were talking about that just a little bit ago. It's just we're bombarded with this thought process that, I'm only going to get 0.25%, so really it doesn't matter what I do with my cash. Well, that's what they want you to, they condition you to think, so then you're willing to give that up to them so they can put it in their machine and make all kinds of money. And that's the problem that we want you to recognize, that you can create this own machine. You can put your own money in your own machine, and now you have control of that supply chain.
And are you saying that the banks aren't looking out for my best interest?
Oh, I would never say that. I'm sure your banker is a lovely person. I'm sure your banker has your best interests at heart. But when it comes time for you, if you can't pay a debt, I'm sure he's going to write the check for you.
Yeah.
Now, anybody that believes that, you probably can hop off this podcast, because I'm sure the IRS and the banks have never looked out for my best interest, ever.
Yeah.
They may come across that they're looking out for you, but in all reality, they're looking out for themselves. They've had a monopoly on this thought process because, again, just because as consumers and people, we become, and I don't mean that in a bad way. I have to say I'm that way sometimes too. So it's lazy from the standpoint of we don't want to challenge our thought process. And this goes back to what Nelson said, rethink your thinking. If banks are making money in this process, why can't we do that? And I shared this idea with somebody, they go, we can do that? I'm like, oh, heck yeah. And I was talking about lending money out to somebody else to use and not being our own customer, like we talked in the grocery chapter earlier. And the client goes, we can do that? I'm like, yeah, why can't you? You're allowed to borrow. Nicole, if I wanted to borrow you $10,000 because you want to flip a piece of real estate, what's stopping me from doing that? Just my trust in you, right? I'm not going to be if I understand the real estate business, the flipping business, and you're doing it well, and you're successul at it, why won't I lend you money and get 15% rate of return on that dollar that I'm going to lend you? People are doing it all the time. In this digital society that we're in, it's happening more and more. Is that there's a lot of, and this goes back to the lending process. And Nelson was an Austrian economist, and he always said that lending has to be done at the you and me level. These solutions to our problems start at the bottom and work up, not like our current government and banks and everything else, which is a centrally controlled operation. So it starts in their thought process, start at the top, and we're going to tell you what to do, and it's going to filter down. Well, the real solution starts at the bottom, at the you and me level, and works up.
Yeah. And one of the things that you have said to me, I have incorporated into my conversations, is that when we think about interest, this chapter talks a lot about paying interest for things such as car loans and boat loans and so on and so forth, credit card interest. And we think about bad. But if we flip that around, if we are earning that interest, so if we're charging somebody else the interest, it's not bad for us then.
Interest is good.
But now, back to this idea that the banks are looking out for their own interests. If we have our own banking, our own financing system, and we're looking out for our own interest, then that interest coming into our little financing system is exactly what we want.
So this goes back to just what we said earlier, right? So we're focusing on the saving side of it, and we think, we're going to spend all this time and effort and energy researching our investments, and I think about and that's not important, but that's the small part of what our income can produce. Imagine if we're spending about 30% of our income just on everything we finance. Think about that. So if we have $100,000 and we're spending $30,000 or $35,000 on interest and payments on everything we do, what if we could take 10% of that over, right? Let's say we're going to take, well, it'd actually be a third. We're going to take $10,000. Now we're taking control of $10,000 every year. We're not worried about the $1,000 because we're going to get it higher and straight because we're going to take more risk with a broker. Because that's the small thing. That's what I call, that's the choking on the gnats, right? We have this huge elephant that we should be thinking about chewing up, but we're choking on the gnats, which is the $10,000 that we're saving. Not that small, but the interest, the difference in interest, 1% interest. We said it's $1,000. Really, it's $100. It's $100. It's not $1,000. Let's do the math correctly. So Somebody's going to get us, we're going to spend all this time and effort to get somebody to think about how do we get a 1% more interest rate of return or return on our investment. 1% on $10,000 is what? $100.
Yeah.
All that time and effort for $100, where we could take that time and effort, study this type of material, understand the banking process, and say, oh, if we could take control of 10% of $35,000, which we spend on interest in our lot, and now we can make that $10,000. So it's just focusing on the right thing is really what we're talking about. Because the problem we're having is we're focusing on the wrong thing.
Yeah.
We're focusing on the small number versus focusing on the larger number and how we can take control of that.
Yeah, so, and it just goes back of controlling as much of the financing in your own life as you can, 100%. As opposed to giving that control away to who's looking out for their best interest, not my best interest. And it's okay. Right. We all should be looking out for our own best interest, our family's best interest. It's not the bank's responsibility to do that. It's our responsibility.
Right. And this goes back to what Nelson in his book he calls becoming your own bank. He didn't say Nicole becoming your banker or Wade becoming your own banker. He wants you to take control of that function in your life. Look out for your own best interest. I don't want to be a gatekeeper. I want to empower you to be able to do that and take care of that. Where banks want to be the gatekeeper. They want to be a gatekeeper of that pool of money that's out there. Mm-hmm. And then once you understand that that's the problem, right? All we're talking about is controlling the environment, your personal finances, controlling the environment, which is your family financing system. So
one of the stories that he talks about in here is, so he talks about American families, and he's using an example of a guy with his family and how much he makes and how much they're spending on stuff. And then he goes to the water cooler, coffee break. So you get this young man together with his peers at a coffee, some such gathering, discussing financial matters. And he says, I can predict what they will talk about, getting a high rate of return on the portion that they are saving. So that goes right back to what we've just been talking about. They're not talking about all the interest that they're paying. They're talking about, oh, I'm getting whatever, 7% on my investments, or I'm getting 1.2% on my savings account or my money market account or whatever that is.
If you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button and please leave a review. This will help this podcast reach and help more people by ranking higher in searches and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.